journaling your trade should be your #1 priority if you are not profitable, and it is the #1 tip that I could ever give someone starting out trading. I would almost classify it as gambling if you are not journaling every single position that you are placing, because then you would have no idea what you're doing right and what you're doing wrong. You do not need any fancy platforms such as TradeSella or a fancy Notion template. Now, while I do think that TradeSella is an amazing trading journal app, I also understand that not everybody has the funds to be paying $50 for a trading journal every month. So in this video, I'm going to be showing you exactly where and how you should be journaling your trades and exactly how I do it myself. So as some of you might be able to tell, we are on the OneNote application, right? Now, this is, in my opinion, the #1 trade journaling app that you could ever get, and it is completely free, okay? This is coming from someone who used TradeSella for a long time. I just personally like OneNote a lot more. As you might be able to tell, I have written a lot of stuff down, right? So I'm quickly gonna go over what all of this is and why I write it down. So first up, we have the pair, okay? Now, what you do here is just write down the pair which the trade was executed on. In this case, this was executed on the NASDAQ 100, E-mini to be more specific, right? Whatever pair you executed it on, you write down here. Contracts, okay, this was done with 2 mini contracts. If you're trading forex, you could just switch this out for lots, okay, lot size. Now type, this is just short or long. This was a short trade. R multiple, risk to reward, this was a 2.09 R. Our entry, okay, so if I actually go ahead and click here, you'll be able to see the trade. I'm going to show you how to do this too, so don't worry. Now, my entry is the price level which I entered at, right? So that is 1806.75. So that is what I write down. Then we have the confluences, right? What were the confluences here? We had a higher time frame delivery up here, a lower time frame market maker sell model, and it was intact with my bearish bias, right? And that is exactly what I wrote down here. Then we have the PD array, which in this case, if we take a look, was a fair value gap, right? So that is what I write down, fair value gap. Then we have the time frame. This was executed on the 1 minute. Then the stop loss, that is going to be the exactly same as your entry, right? The price level at which you placed your stop loss, right? Then your take profit level, same thing. Stop loss logic, that is basically why you put your stop there, right? So if we go and look at the trade which I'm referring to, my stop was the beginning of this 1 minute gap. Now, this was a breakaway gap anticipation, meaning that I anticipated that price would react off of this gap and not hit this gap, aka this would be a breakaway gap, right? So that was my stop loss logic. Now, my take profit logic was an obvious swing low and the end of the market maker sell model. So this low here was obviously a pretty obvious swing low, and it was the end of this lower time frame market maker sell model. Mistakes made. Now this is just what mistakes you made during that trade, right? So I wrote down, I was not following my rules in terms of time. I should have waited until the New York Stock Exchange open, aka 9:30, right? So if we take a look, I entered here at 7:08 a.m. okay? So my mistakes were the time, right? The time of which this trade was placed was wrong in terms of my own rules. So that was my mistake, so I write it down. Then we have the pre-market plan followed. I wrote no, right? The pre-market plan we're going to get into in a little bit. Then we have the emotions during the trade. I wrote my emotions during this trade was fine. I managed the trade how it was supposed to, and I did not feel any type of emotion during the trade, okay? Now, it is important that you are very honest with yourself here, right? Because if you're not honest, then it's not going to work. Rules followed, obviously no. Then major news this week, CPI, day, Monday, right? What time was it placed? 0709, actually it was 08, right? Then we have the net P&L plus $350. Then we have the trade report, which is obviously when I click it, views the trade. So I will show you how to do this in just a second. Then the extra, this is basically where you write down what you didn't answer here, right? So I wrote down, I know the timing of this trade was off and I shouldn't have placed it. I was extremely confident in this play and that is why I placed it. I understood it was a violation of my rules, so my size was therefore lowered. Now, the reason why I write it down in extra, because I would have never known this if I didn't have this extra option, right? Because I am not answering this in any of these questions. So any extra information you have, you put here. Very important, okay? Now let me quickly show you how to get this link. So if we are here on TradingView and this was the position, I would go up here to this icon, click it, and then it says publish idea. We could name this fair value gap entry 1203, actually 1202. We can write whatever. This was, we just say chart patterns, doesn't matter. This was a short. Then I click publish private idea. You could do it publicly or privately. I do it privately. Then I say publish, right? Then I take that link right here, I copy it, and I put it in the journal. Some people like to just put screenshots of their trades. I personally don't. I think it just looks messy and it fills up way too much. So this is what I do. You could do whatever you want. But yeah, that is basically what I do when I journal my trades. This is exactly what I do, okay? Now, all of this is extremely important because if you are not writing this down, you are not able to tell what you are performing your best under and what you're performing your worst under, okay? So let's say in 3 weeks time, you face a losing streak. What you can do is go through the last couple of weeks and review your winners and losers. Then you can find out what days you're performing the best under, what news you're performing the best under. Do you have more success when you are following your pre-market plan or not, right? You can see what mistakes you're making and see if you're kind of repeating those same mistakes. You can see what take profit logic you have the most success with and what stop loss logic you have the most success with, what time frame you're the most profitable on, what PD arrays are working the best for you, right? What confluences are working the best for you, what R multiple or risk to reward works the best for you, right? How many contracts do you usually have on your winning trades? Because contract size actually matters a lot when it comes to winning or losing. So yeah, that is exactly what I do, and that is why it is so important. But let me also show you my pre-market planner, because that is also something that I do every single day, and that is also very important, right? So if I come up here, I've created a pre-market planner template. Now, theme of market is basically, as I wrote, news, market conditions, etc., right? What news do we have today? Are we expecting a high volatility day or a low volatility day? That can kind of tell us if we should be over leverage or normal leverage or lower leverage. Then we have market conditions. Are we bullish? Are we bearish, right? Is it obvious, or do we have choppiness? Are we in a range? What are we doing, right? What is the condition of the market currently? And we have a pre-market screenshot. That is pretty self-explanatory. You just post a screenshot of pre-market. Then you write down your key levels. Say there is a specific fair value gap that I am expecting a reaction off of. I would write that down. That could also be a level of support or resistance or demand zone or supply zone, whatever you're trading, right? Write it down here. Scenarios. What are you expecting to happen? So let's say that the fair value gap that I wrote down on my key levels, I am expecting that we hit that and then go lower, whatever it might be. I will show an example right after this. Then a conclusion, and then an end of day check-in. What happened and what did you do? So let's look at today. I wrote no red news today, and tomorrow we have CPI. This means lower probability setups and often chop and not worth engagement. I'm expecting to not place a trade today. Then we have my pre-market screenshot of a 15-minute chart. Then we have my key levels, right? I wrote, as I noted in my Discord, the 1 hour gap is my key level for today and possibly tomorrow. Today may just be choppiness. Then we obviously have the equal low liquidity with a daily gap right beneath. So those are my key levels and kind of what I am watching for the day. Then we have scenarios. I wrote, I am expecting a retracement towards the hour 1, 11 o'clock gap, and then an expansion lower towards the equal low liquidity and possibly a fill of the daily buy side inefficiency, sell side imbalance, short busy, right? I'd want to look for a turtle soup around that hourly gap if we ever get there. Conclusion, clear vision for today and possibly tomorrow. However, accompanied by no news today and a big news release tomorrow. This is exactly what a very bad day with a lot of chop looks like. Waiting for volume to be released with CPI on Tuesday, then I will capitalize. And then at my end of day check-in, I wrote, I in fact did not place any trades due to the economic calendar looking weak, and price action also told me to stay still, right? So I use this pre-market game planner to kind of keep me accountable. So the end of day check-ins are really important to kind of see if you are following what you told yourself you would do at the beginning of the day, and it is just crucial, okay? Then I have one last thing that I want to share with you, and that is my monthly recaps. So here we can see my February recap. I have my trade win percentage, my days win, my days traded, and my net P&L for the month. Then we have the best setups of February. We'll just use the first one here, right? This was a good inversion Fabega play, and what I said was the best play of February. And then I wrote, beautiful inversion Fabega trade. We took out all internal liquidity of the range and had equal highs / low resistance liquidity resting above. Very clean and clear, right? So the reason I do this is because at the end of each month, I can go over what setups I had the most success with, right? Then we have the biggest opportunity cost. Now this basically means whatever, maybe there was something in the market that you knew was going to happen, but you failed to capitalize off of, or like I did in this case, I had a very good trade where I was fully aware of the drawn liquidity, but I decided to cut it off early. So as you can see, I wrote, very unhappy with the way I treated this trade. My idea was absolutely correct, but I decided to cut the trade early once price returned to my entry. The reason for this was that I thought the market was too choppy. What I should have done was instead waited until the real power hour at 3:15 p.m. where the real volume is released. Price rallied straight to my PT and I was out. Unfortunate, right? So actually a funny story. The exact same thing happened this month, right? Same time, late PM session, choppy price action. I was in a trade, I cut it off, break even, and it rallied straight to my TP, right? So I did not learn from my biggest opportunity cost last month, but hopefully I know now, from now on, that if I place a trade during late PM session, I should wait till 3:15 because that is often where real volume is released or a lot of volatility will enter the market, right? Then I have my psychology and health. And remember, we have to be very honest with ourselves here. I wrote, my overall psychology was 50-50. I struggled and struggle a lot after losing days. I start questioning if this is even worth the mental drain and what I'm doing wrong. I noticed that I have trouble stopping trading when I encounter a losing day. That is why my losing days often turn much more red than anticipated, and I always regret it looking back at it. What I should do is remember my stats. I don't need a 100% win rate to make money. I don't even need a 50% win rate. I've had two losing days in a row that were bigger than I originally wanted them to be. However, I am not angry. I understand what I did wrong and what I did right. I decided to only trade from 8:30 to 11:30 and only take one trade per trading day. This helps me keep my losing days lower than my winning days and allows me to protect my capital in the long run. This may feel like it's slow progress. However, I must remember that this is how I protect my capital in terms of the future. It is easy to see when looking at my data that I should stop trading once I lose. So this is me being completely honest with myself and also you guys now, right? This is probably something that a lot of you are struggling with, if not everyone. This is something that I believe you can never really get rid of, but learn to, work your way around. And the way you work around it is by writing it down like I did here. Then I have the things to do better / work on next month. Understand and accept losing days. It's unavoidable and necessary for growth. Stick to one trade per trading day. Only trade within the 8:30 to 11:30 time gap. This is of course personal preference, but the reason I decided to only trade once and only trade within that very specific time gap is because I spend way too much time in front of the charts. Like sometimes I'll spend 12 hours a day in front of the charts and I have a lot of other stuff to do, right? I have a family, I have friends, I have all this other stuff that I need to do. And when I'm just spending 12 hours a day in front of the charts, that doesn't really work together. So that is why I decided to write it down as a thing that I need to work on. Then learn to walk away from the charts and avoid spending 8 to 12 hours a day staring at them. That kind of goes hand in hand with this one, right? So by these monthly recaps, I'm able to, keep myself accountable and kind of go over what I did wrong this month and what I did right. and what I need to work on. Okay, do you understand why I say this is so important and why it's basically gambling if you're not doing it? At least that was the point of the whole video. I really want you guys to understand how important this stuff is. But that was basically the end of this video. The point of me making this video is obviously because I think it is just so important, and I think it's holding a lot of people back. I think so many more people would find profitability if they started, implementing this in their day-to-day life. This was me being completely honest with myself and completely honest with you, right? I showed you my issues in terms of my mental health when I'm trading. I show you my mistakes, what I did right, what I did wrong, all of this stuff, just to really make sure you understand how important it is. So I hope you enjoyed, and I hope you learned a thing or two, and I will see you in my next video.